Last week I posted a video that explained, based upon appreciation of home values in our area, homeowners are making a crazy amount of money on their real estate investment. That leads us to the next logical question. Should I invest in the stock market or should I invest in real estate? Hi, I'm Bob.Woolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. I'm also the author of 2 books, The Part of Leadership No One Talks About, and more importantly for any viewers here, My Secret Wealth of Information for Any Home Seller. In today's video, I'm going to compare the pros and cons of investing in real estate versus investing in the stock market. And I'm going to do that right after this 8-second break, so stick around. Let me start with this statement. If you are currently renting and do not own real estate, do everything you can to become a homeowner. In the video I posted last week titled Time to Sell, Time to Buy, or Time to Hang On to What You've Got, I profiled in one example of how a homeowner could earn a 1-year return on their money of 272% APR. The reality is this. I know of people who are renting apartments for around $3,000 per month. They are getting zero return on their money. They might as well be burning their money in a fire pit. Here I have $10,000 in $100 bills. So here's $10,000, here's $20,000, here's $30,000. Now picture every year taking this money and merely lighting it on fire and turning it into ashes. This is what you're doing with your rent money every year. In December of 2017, I posted a video where I did a case study of a Bothell homeowner who bought his home in November of 2013 with a $20,000 down payment. Over the next 4 years, he earned 34.72% APR on his money. In essence, his $20,000 down payment turned into $116,000 just 4 years later. Now here is where he made his money. His mortgage rate was 4.5%, but his home was appreciating at 13.4% per year. So he was making money on the money he borrowed. He borrowed money at 4.5% while he was earning 13.4% on that money he borrowed. That's called leverage, or the power of other people's money. Now in this case, he was paying his own debt service. And what I mean by that is he was making his own monthly mortgage payments. And we calculated the cost of that capital into the APR rate also. If you go to that video, you'll see the details of the financial analysis and see exactly how he earned 34.7 APR as a return on his investment. Now, if you're already a homeowner, you may wonder, should I buy rental properties or should I invest in the stock market? On December 29th of 2017, I posted a video titled Creating Wealth with Investment Property and the Power of Other People's Money. In that video, I showed a real-life example of buying a condo and using it as a rental property. And I showed exactly how you as an investor could have earned between 30 to 40% APR on your cash investment, and your tenant is paying the debt service for you. So go check out that video. If the on-screen links to those videos don't work, I'll put links in the comment section below that will get you to those videos. Now here's the pros and cons of owning rental property versus investing in stocks. The pros of investing in real estate. Investing with debt is safer with real estate. Also known as your mortgage, you can invest in a new property with a 5% down payment or less and finance the rest of the property's cost. Investing in stocks with debt, which is known as margin trading, is extremely risky and strictly for experienced traders. Real estate investments can serve as a hedge against inflation. Real estate ownership is generally considered a hedge against inflation, as home values and rents typically increase with inflation. There can be tax advantages to property ownership. Homeowners may qualify for a tax deduction for mortgage interest paid on up to the first $1 million in mortgage debt. There are also tax breaks when you sell a principal residence, such as an exclusion that may allow you to avoid capital gains tax on net proceeds of $250,000 if you're single, or $500,000 if you're married and filing jointly. If you own and sell commercial property or rental properties, you may be able to avoid capital gains tax through a 1031 exchange if you reinvest the proceeds in a similar type of property. And investment properties can earn tax breaks through depreciation or writing off wear and tear on the property. Now the cons of investing in real estate. Real estate investments can be more work than stocks. While purchasing property is easy to understand, that doesn't mean the work of maintaining properties, especially rental properties, is easy. Owning properties requires much more sweat equity than purchasing stock or stock investments like mutual funds. Real estate is expensive and highly illiquid. Investing in real estate, even when borrowing cash, requires a large upfront investment. Getting your money out of a real estate investment through a resale is much more difficult than the point-and-click ease of buying and selling stocks. When selling stocks, you can usually have the money from the sale of a stock in your bank account within 3 to 5 days. But selling your home can take much longer. However, right now in the Seattle area, the median number of days a single-family resident stays on the market is about 8 days. Then it's just a matter of how long until the transaction closes, which would normally be done in 3 to 5 weeks. In the past, particularly in a buyer's market, it could take a couple of months to sell your home. But right now, with a housing inventory shortage, it's definitely a seller's market in the Seattle area, and homes are selling usually in about 1 week. Real estate has high transaction cost. A seller can expect to pay significant closing costs, which can take as much as 6 to 10% off the top of the sales price. That's a hefty cut compared with stocks, especially now that most brokerages charge no fees for stock trades. However, keep in mind, the percentages that I showed in the 2 videos I mentioned previously, those APR rates were calculated after the cost of the sale was subtracted from the proceeds of the home sale. It's difficult to diversify your investments with real estate. Location matters when investing in real estate. Sales may slump in one area while values explode in another. Diversifying the purchase of real estate properties by location and type, i.e. a mix of residential, commercial, for example, requires much deeper pockets than the average investor has. Now, the pros of investing in stocks. Stocks are highly liquid. While investment cash can be locked up for years in real estate, the purchase or sale of public company shares can be done the moment you decide it's time to act. And unlike real estate, it's also easier to know the value of your investment at any given time. It's easier to diversify your investment in stocks. Few people have the time, let alone the cash, to purchase enough real estate properties to cover a broad enough range of locations or industries to have true diversification. With stocks, it's possible to build a broad portfolio of companies and industries at a fraction of the time and cost of owning a diverse collection of properties. Perhaps the easiest way is to purchase shares in a mutual fund or index funds or exchange-traded funds. These funds buy shares in a wide swath of companies, which can give fund investors instant diversification. There are fewer, if any, transaction fees with stocks. While you'll need to open a brokerage account to buy and sell stocks, the price war among discount brokers has reduced stock trading costs to zero in most cases. Many brokers also offer a selection of no transaction fee mutual funds, index funds, and ETFs. Now, the cons of investing in stocks. Stock prices are much more volatile than real estate. The prices of stocks can move up and down much faster than real estate prices. That volatility can be stomach churning unless you take a long view on the stocks and funds you purchase for your portfolio, meaning you plan to buy and hold despite volatility. Selling stocks may result in additional income tax. When you sell your stocks, you may have to pay regular income tax. If you've held the stock for more than a year, however, you may qualify for taxes at a lower rate. Also, you may have to pay taxes on any stock dividends your portfolio paid out during the year. Stocks can trigger emotional decision making. While you can buy and sell stocks more easily than real estate properties, that doesn't mean that you should. When markets waver, investors often sell when a buy and hold strategy typically produces greater returns. Investors should take a long view of all investments, including building a stock portfolio. And finally, the last 12 months of the stock market indexes show the Dow is up 7.8%, the NASDAQ is up 45.6%, and the S&P is up 0.5% for the last 12 months. Typically, annual appreciation for the indexes is usually somewhere in the range of about 7% annually. But here's the bottom line. If you are currently renting, do everything you can to become a homeowner. Stop throwing your rent money away every month. Put it to work for yourself so it begins to build your personal wealth. If you don't know where to start, get a hold of me. I can connect you with advisors who can help you create a strategic plan to either improve your credit score or save money for your down payment or both. But you need to build a plan and stick with it because it's all about building your personal wealth. And I can help you get started on the right path by connecting you with the people who can help you. If you're currently a homeowner, you may want to look at investing into rental properties. As you will see in the videos I mentioned earlier, wealth building through rental properties can be extremely lucrative. And that doesn't mean that you have to have rental properties forever. There are pros and cons for everyone's personal preferences, and those preferences will be different. I used to have rental property myself, and it was very lucrative. But after about 15 or 20 years, my priorities changed, and I put the money into other investments that consume less of my personal time. However, whether you are a first-time home buyer or homeowner looking for real estate investments, today's low interest rates, coupled with our high levels of price appreciation, creates an ideal opportunity to use the power of other people's money or to use leverage, which is one way to yield substantial gains on your real estate investment. Well, that music means we're out of time for today. I hope you found value in today's video. If you did, click that subscribe button and click that reminder bell. That reminder bell will notify you when I post new videos. If you'd like to get a copy of my book called My Secret Wealth of Information for Any Home Seller, I'll post a link in the comment section below. All you have to do is tell me where to send the book. If you'd like to contact me, you can find my email address and my telephone number in the description below. And at the end of this video, call me or email me. I'd love to hear from you, and I'd love to represent you in your next real estate transaction. I'm Bob.Woolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. Every Tuesday morning at 7 a.m., I post new videos about buying, selling, or investing in real estate, as well as some home tours and listing videos. I'll see you next week.